and welcome to another episode of FPI Studio Talks, where we talk about all things financial planning and money management. I'm Ronald, your host today, and today we're going to talk about the 2023 tax season in South Africa. Yes, I know, taxes are not the most exciting topic, but they're very important, and believe me, you don't want to mess them up. So buckle up and let's get this started. First of all, what is tax season? When does it start and when does it end? Tax season is the period when you have to file your income tax return with SARS, the South African Revenue Service. You know, the guys who take a chunk of your hard-earned money every month and use it for various purposes. We'll get to that later. The 2023 tax season for individual taxpayers started on Friday, the 7th of July at 8 p.m. and ends on Saturday, the 23rd of October at midnight. And that's for non-provisional taxpayers, by the way. If you're a provisional taxpayer, you have until Monday, the 24th of January 2024 to file your tax return. Lucky you. And remember, when we talk of the 2023 tax year, we are referring to the period starting 1 March 2022 to 28 February 2023. Now, why should you, an ordinary South African, care about taxes anyway? Well, for one thing, it is the law. You have to pay taxes if you earn above a certain threshold, which is 91,250 Rand for the 2023 tax year if you're under 65 years old. If you don't pay your taxes or file your return correctly, you could face penalties, interest charges, or even criminal prosecution. Now, nobody wants that. For another thing, paying taxes is your civic duty. It is how you contribute to the development and maintenance of public services and infrastructure in your country. Things like roads, schools, hospitals, social grants, defense and security, etc. You know, the stuff that makes life easier and safer for everyone. Speaking of which, where do all the taxes collected go to and how are they utilized? Well, according to the latest budget review by the National Treasury, the total revenue to be collected by SARS for the 2023-2024 fiscal year is projected to be 1.76 trillion. That's a lot of zeros. Of this amount, 1.35 trillion will go to the national government, 386 billion will go to provincial governments, and 139 billion will go to local governments. The national government alone will spend most of its share on education, about 396 billion, health, 248 billion, social development, 223 billion, defense and public order, 212 billion, and debt servicing costs, 269 billion. They're just some of the main categories of expenditure, but there are many, many more subcategories and programs that are funded by your taxes. So, who makes the decision on what that money collected should be used for? Well, ultimately, it's the Parliament of South Africa that approves the budget every year after it's presented by the Minister of Finance. The budget is based on the Medium-Term Expenditure Framework, which is a 3-year plan that outlines the government's spending priorities and revenue projections. The MTEF is informed by various policy documents such as the National Development Plan, which is a long-term vision for South Africa's social and economic development by 2030. Of course, there are also various stakeholders and interest groups that influence and lobby for certain budget allocations and outcomes. Now that we've covered some of the basics of taxes in South Africa, let's get to the nitty-gritty of filing your tax return. Who is required by law to file a tax return? Well, as I mentioned earlier, if you earn above 91,250 for the 2023 tax year and you're under 65 years old, you have to file a tax return. If you're 65 years old but under 75 years old, you have to file a tax return if you earn above 141,250 Rand. If you're above 75 years old, you have to file a tax return if you earn above 157,900. These are called filing thresholds, and they change every year depending on inflation and other factors. What if you're not sure whether you should file a return or not? How can you find out with certainty if you should file a return or not? Well, the easiest way is to check your auto-assessment status on the SARS e-filing website or the SARS Mobi app. SARS will automatically assess your tax liability based on the information they've received from third parties, such as your employer, your bank, your medical aid, your retirement fund, etc. If you qualify for auto-assessment, you will receive an SMS from SARS with a link to view your assessment. If you agree with the assessment, you can accept it and pay any tax due or receive any refund owed to you. If you disagree with the assessment, you can edit it and file your own return. You have until the 23rd of October 2023 to do this. How does one file a tax return anyway? Well, there are 3 ways to do this. 1. Online. 2. Via the SARS Mobi app. Or 3. At a SARS branch. The online option is called e-filing and is the most convenient and fastest way to file your return. You can access e-filing on the SARS website using your computer, tablet or smartphone. You will need to register for e-filing first though if you haven't done so already. The SARS Mobi app is another option that allows you to file your return using your smartphone. You can download the app from the Google Play Store or the Apple App Store. You will also need to register for e-filing first if you haven't done so already. The third option is more traditional, and that is just to visit a SARS branch and file your return with the help of a SARS official. Remember, you will need to book an appointment online first before visiting a SARS branch. Now, some of you may have navigated tax season in the past, but what are some of the changes that have been introduced for the 2023 tax year, and how do these impact taxpayers? Well, there are quite a few changes that you need to be aware of when filing your return this year. Here are some of the main ones. The first one is the Tax Return Status Dashboard, which is a feature found on the SARS online query system. This feature provides taxpayers, registered representatives, and tax practitioners with a visual status of the progress of a personal income tax return in terms of submission, verification, or audit, and the status of a refund that's under processing. Another change is that SARS has aligned the 40 business days rule to the filing season end date. This means that if you receive an auto-assessment from SARS, which is a pre-filled tax return, based on information that SARS has received from third parties such as your employer, your bank, or your medical aid scheme, you have until the 23rd of October 2023 to accept or edit your auto-assessment. This gives you more time to review your auto-assessment and make any necessary changes before submitting it. Another change is that SARS has adjusted the payment due dates for non-provisional e-filers. If you're not in the auto-assessment population, your payment due date will be 30 days after a notice of assessment has been issued. If you're in the auto-assessment pool, your payment due date will be 30 days after the filing season closing date. This means that if you owe any tax to SARS, you have more time to pay it without incurring penalties or interest. A third change is that SARS has introduced new fields for foreign income disclosure on the tax return. If you've received any income from foreign employment services that is not reflected on a South African IRP5 or IT3A certificate, you must declare it on your tax return and indicate whether it is subject to tax outside South Africa and whether it qualifies for an exemption under Section 10(1)(o) of the Income Tax Act. This applies to income sourced from a foreign employer while working in South Africa and/or abroad. Now listen up, lovebirds. If you and your sweetheart are tied in the financial knot of marriage in community of property, SARS has this season retrieved a marriage in community of property status from your previous tax return and collaborated with the Department of Home Affairs to confirm marital status. Where the spousal status is successfully matched, you have interest-bearing investments. SARS will replicate the interest investment certificate on both spouses' returns, where they'll be taxed 50% upon assessment. Some of the other changes are, the personal income tax brackets and rebates have been adjusted for inflation, which means that most taxpayers will pay slightly less tax than last year. The medical tax credit has been increased from 332 Rand to 347 Rand per month for the first 2 beneficiaries and 224 Rand to 234 Rand per month for each additional beneficiary, which means that you can claim more money back for your medical expenses. Finally, let's talk about some of the common issues that SARS has identified as problem areas in the past and how to avoid them in the current tax season. First up, we have the sneaky issue of taxpayers conveniently forgetting to mention some of their income sources or claiming deductions they have no right to. Now let me tell you, that's a one-way ticket to understatement penalties, audits, or even criminal persecution. Yikes. To steer clear of this mess, just make sure you declare all your income sources properly and keep those supporting documents handy for at least 5 years. Another trap you want to sidestep is to neglecting verifying your personal and banking details with SARS before hitting that submit button. Trust me, this is a sure way to seeing your refund delayed or to you receiving inaccurate payments from SARS. So, before you dive into tax season, double check that your personal information and your banking details are up to date by visiting the SARS e-filing website, and you can do this by logging onto your profile. A third issue is that some taxpayers do not use the correct channels or methods to file their tax return. This can result in errors, rejections, or non-compliance. To avoid this, you must use the channel or method that is suitable for your tax profile and filing requirement. You can file your tax return online via e-filing or the Mobi app, which are convenient, secure, and free. You can also file your tax return at a SARS branch, but you must book an appointment online and bring all the required documents with you. Other issues to look out for include not verifying your pre-populated information on your return, such as your IRP5, I23A certificate, and other third-party data. Another issue is not checking your assessment notice after filing your return and querying any discrepancies or errors with SARS within 30 days. Finally, you should pay any taxes that you owe by the due date to avoid penalties and interest. You can use the SARS e-filing website or the Mobi app again to make payments online, or use the bank details provided on your notice of assessment to make payments at a bank branch or online. Now look, with everything I've said so far and tax season generally, I do understand that the season of taxes can be a stressful time for many people, especially if you're not sure how to file your return correctly and avoid penalties. That is why it's a good idea to seek the help of a registered tax practitioner who can guide you through the process and ensure that you pay the right amount of tax and claim the deductions you are entitled to. A registered tax practitioner is a professional who has met the standards and requirements of a recognized controlling body, such as the Financial Planning Institute of Southern Africa. They have the knowledge, skills, and experience to handle your tax affairs with competence and integrity. They can also save you time and money by avoiding errors and delays that could result in fines or audits from SARS. To check if the person offering to assist you with your tax return is a registered tax practitioner, you can visit the SARS website and use their online verification tool. Alternatively, you can contact the FPI and ask for their confirmation if they are a Financial Planning Institute member. The FPI is the leading professional body for financial planners in South Africa, and we have a network of qualified and ethical members who can help you with your tax and financial planning needs. For more information on how to find a registered tax practitioner near you, visit the FPI website at www.fpi.co.za. You can also access free financial education resources and tools on the FPI My Money 123 website at www.fpimymoney123.co.za. And don't forget to follow FPI on our social media platforms for the latest news and updates on tax and financial matters. Remember, tax season doesn't have to be a headache if you have a registered tax practitioner by your side. I hope this video has given you some useful information and tips on how to navigate the 2023 tax season.